All right, so once you guys know how to use the rules to your advantage, we're going to show you the 3 ways to enter the market using the harmonic scanner. And these 3 ways are universal. So anytime you guys ever trade on your own, you're going to need to utilize the 3 ways to enter the market. Number 1 is the market execution. When you guys enter the market at what's called the market execution, it simply means you are entering the market at the current market price, at the current price that it's currently at. So as soon as you press sell, you start making or losing money. You press buy, you start making or losing money. So you're entering at the current market price. Number 2 is we have what's called limit orders, okay? So you have buy limits and you have sell limits. So the limit order, in reality, what it really means is a rebound in the market, okay? So if you look at my diagram, right? Let's say the market's been on a downtrend, right? As soon as you enter a limit order, they are also called pending orders. And the reason they're called pending orders is because when you enter that limit trade, buy limit or sell limit, you are not making or losing money just yet. It's simply on hold. It's kind of almost, imagine it like a trap. Imagine there's a whole field of, let's say, bear traps, right? If you run to the field, the bear trap will not activate unless you what? Unless you step on it. So these trades won't activate until the candlestick reaches the entry price, okay? So a buy limit order, right, means that the market's on a downtrend. They're going to call a trade out before it reaches the entry price. And remember, it's a trap. So they call it right over here, and as soon as the candlestick reaches the entry point, the trade will activate. When the candlestick reaches the entry point, the trade will activate and you will either start making money or losing money. But a buy limit is a rebound off of the entry to the upside. A buy limit is a rebound to the upside from the entry price from the entry price that you actually put in. So that's exactly what a buy limit is. A sell limit means that the trade right now it's in an uptrend. Obviously, what goes up must come down. So if going up, they call a trade right over here, right? So it's not touching the entry price yet. So in that gap, it's gonna go over here. The trade and that candlestick and the current price will touch the entry, and what the professional is expecting it to do is it's expecting it to have a rebound or what's called a reversal to the downside. So again, limit just simply means a rebound. And then a buy limit is a rebound to the upside, and a sell limit is a rebound to the downside. So that's how you guys know, what limit orders are. Stop orders are also very simple. You guys have buy stop and a sell stop. What I like to call stop orders for is called a breakthrough. Stop orders are a breakthrough, right? So when you have a buy stop, it means that the market is obviously in an uptrend. The trade has momentum. So they're going to call it before it reaches the entry price. And again, stop orders are also what I like to call traps in the market. So as soon as you place it, it's not activated just yet. It's also a pending order. So they call it before, and it says if this candlestick, or what's called the current market price, if the current price hits the entry, it's not going to rebound. The stop order, remember, it's a what? Breakthrough. It'll have a breakthrough to the upside because it's called a buy stop. So the stop means a breakthrough, and the buy means in an upwards direction because it's increasing in value. So it is a breakthrough to the upside, and that's what a buy stop is. A sell stop means that the trade has momentum to the downside, right? Let's say the news is affecting the market in a negative way and it's going down. That's okay. We are going to set up what's called a sell stop, which is a trap, right? And it'll be a breakthrough to the downside. It'll be a breakthrough. So they call it right over here. It hasn't touched the entry price yet. It's going to go down. As soon as it touches it, we are expecting it to break down through to the take profit. The buy stop would be a breakthrough to the upside to the take profit. And remember, guys, limit orders are rebounds, stop orders are breakthroughs, and market executions means that you guys enter the market right away. I recommend you guys take notes on this. It's one thing for you to see it. That's what amateurs do. But professionals take notes on this, understand it, internalize the information, and they are able to go out there and not only utilize the scanner, but make sure they profit with it on a daily, weekly, monthly basis. With that being said, those are the 3 ways to actually enter the market, because when you use a scanner, you need to make sure you memorize this and not use a sheet of paper. Everything has to be in the dome. All right. All right, guys. So to kind of show you, I just showed you guys right now exactly how to enter the market 3 different ways. This is what the scanner looks like. Okay. Usually the newest trades always pop out first. So can you guys please do me a favor and follow my cruiser to the left-hand side? You will see the broker JAFX, and it says scan for M15 or scan for H1, H4, and D1. So what you guys need to understand is that don't really do M15 trades simply because those time frames give you a very small take profit or stop loss. So I don't really do those. I don't suggest you guys do those, but we should always stick to scanning for the H1, H4, and D1 time frames, right? So like I told you, the newest trades are usually close to the very top, and the older trades are towards the bottom. So right now, let's click on Euro AUD H1 time frame. It loads up. It looks like they wanted us to enter at point D. Kind of came down, hit take profit number 1, but came back up. And it's right now close to the entry. Honestly, I would not do this trade only because it's already ran its course to the take profit. So the scanner already tells you, okay, take profit 1. Guys, sometimes the trades are not supposed to hit all 3 take profits because the market sometimes moves in uncontrollable ways. Sometimes it's very volatile. So since it already hit TP1, doing it right now, even though the candlestick is very close and within its range to enter, you're kind of taking a risk. So I would not take a risk. I would play it safe than sorry. I would be patient and let's look for the next setup. We go back to JAFX, right? We come over here. Let's go to Euro USD. All right, so Euro USD obviously already ran its course to all 2 take profits, and even to take profit number 3 did not hit the stop loss, as you guys can see. So that was clearly a winning trade. Let's see AUD JPY, AUD JAPY. So this is perfect. Wow. Okay, so just put everything down and just listen to me, and then we'll kind of do this step by step together. Okay. So here's what we're gonna do. The first thing I look for, if you guys are taking notes, number 1, the first thing you want to identify is this an old trade or is this a new trade? As I can see, the candlestick has not reached a stop loss and has definitely not reached a take profit just yet. So guys, it is a new trade. Number 2, okay, I'm going to see on which way we're going to enter the market. If you look at the candlestick right now, this trade, right, if it keeps going up, it looks like it'll hit the top entry. Here's what I would do. For this top entry, follow my cruiser. For this top entry, I would do a sell limit. The harmonic scanner does not tell you when to buy or sell. Like, it doesn't tell you, hey guys, it's a buy trade, or hey, it's a sell trade. Guys, you're supposed to already know. The take profit is below the entry, so it is obviously a sell trade, not a buy trade, right? So it is going to be a limit because it is also a rebound. The algorithm is predicting for this candlestick, right, to go up here, right? So it's not activated yet. So when you enter the sell limit, it's not activated. When this candlestick reaches the entry, the trade will then be activated, and it'll be a rebound to the downside all the way to take profit number 1. So understand, if you guys have your MT4s, please take it out right now. Okay, you guys can kind of play and stop me as we go through this process. Go on your MT4, and guys, please find the currency pair AUD JPY. If you don't have it in your quotes, please click on the upper right hand corner of your MT4, click the little plus sign, type it on the search bar AUD JPY, click on it, find it, add it, and then go back to your quotes. Once you guys are there, click on AUD JPY, and then you're going to click on trade. When you click on trade, right under AUD JPY, you will see where it says, instant execution, market execution. It'll say buy limit, sell limit. Just make sure you click that little statement right there under the currency pair, and you guys are going to click sell limit. Okay, sell limit. Right under the sell limit, hypothetically, guys, if it's on a demo account, I recommend treat your demo like you would your real account. So do like a 0.05, do a 0.08, maybe do a 0.10, but don't go above a 0.10. Like, it's not necessary. So please stay within range, okay? Pick your lot size. Right under there, under the lot size, it'll say price. And what it really stands for is your entry price. So you're going to copy and paste the entry price, the top one that says 82.03. 82.03 is the entry price. So it says if the candlestick goes up to that price, right, it reaches it, the trade then gets activated, and you are in. Guys, for the rest of it, please copy and paste your stop loss, which is 82.21. If you look at it, look at the entry, 82.03, and look at the stop loss, 82.21. Remember, the pip in the JPY pairs is the second decimal place to the right. So what is 21 minus 3? If I'm not mistaken, I think that it is 18. So in this trade, we are only risking 18 pips from the top entry to the stop loss. 18 pips from the top entry to the stop loss is the only thing we are risking. That's just so you guys understand. And please, I recommend if you're brand new, only do take profit number 1, guys. Only do take profit number 1 from the top entry, 82.03, to take profit number 1, 81.49. Guys, what is 3? Basically, yeah, what is 3 minus? Let me see. Okay, yeah. No, you guys are good to go. So just make sure you copy and paste take profit number 1, and then press place. Now, that is one trade. This trade provides you 2 entries. So we are going to go and click on your MT4 again on AUDJPY and click on trade. Now remember, limit orders are rebounds, and then for the bottom entry, we are going to take what's called a sell stop. Okay, we're going to take a sell stop. Why? Because it'll be a breakthrough to the downside. That's what we're looking for. We are looking for a breakthrough to the downside. So click on AUDJPY. Change that sell limit into a sell stop because we're looking for that breakthrough to the downside. Yes, if I repeat some of these things, it's because repetition is reputation. And I want to make sure you guys internalize this information. Pick your lot size, whatever you guys feel comfortable with, especially if it's a demo account. If it's a real live account, like, pick what you're supposed to pick. Then what you guys are going to do is copy and paste the entry price, 81.77. Okay, 81.77. The next thing you're going to do is copy and paste the stop loss, copy and paste take profit number 1, and boom, you guys are in the trade and you guys are good to go. So we have a sell limit, so it's going to come up here, it's going to rebound to the downside, and then when it does rebound, it'll kind of have momentum. It'll hit this trade, it'll hit this entry, activate the trade, and then go down to take profit number 1. I'm not going to do this right now, but what you guys should be doing on a sheet of paper, on a pen, is write down your entry points, write down your stop losses, and write down your take profits, and make sure you guys subtract, each number and see how many pips you are losing and how many pips you guys are gaining. Okay, so that is for AUDJPY. Very, very good trade. That's exactly what I would do for that one. Let's go on. CAD JPY, Canadian dollar, Japanese yen. Oh, this is great. All right, so rule number 1 is a trade new or old? Guys, it is a new trade simply because it has not reached or even been close to reaching your stop loss or your take profit. Number 2 is how are we going to enter the market? I see that this gap is very small. If you look at the current market price, it's at 82.73. The entry price is at 82.75. Guys, it is less than 10 pips to the entry. Remember, our rule number 3 is enter the market at a market execution if the trade is within 10 to 15 pips of the price they gave you. So this is in range. Is it 10 to 15 pips below? Yes, it is. So guess what? You're gonna go, guys. Again, this is very hands-on training. Please go to your MT4s, right? When you go to your MT4, click on CAD JPY. Click trade, and then you're going to leave right under CAD JPY. Leave it at, if you guys are on a demo account, it would be instant execution. If you're on a live account, it would be market execution, okay? So make sure you put that in. We're going to enter that trade at the current market price, 82.72. Please make sure that you guys copy and paste your stop loss. I can already see, look at the stop loss. Guys, the stop loss, I believe, is like about 80, 70 something pips, 70 to 80 pips already. So that means that this is a swing trade. Maybe if you're using $300, don't put a 0.04, guys. Make sure that you pick a lot size that's less than the one I recommended, because the stop loss here is a lot bigger. You never really want to move your stop loss around. Like you want to stick to what they give you. Don't move it up, don't move it down. But just make sure you change your lot size. So instead of using the recommended one I give you, again, use a smaller one because the stop loss is bigger. So you guys have to know and be considerate of what you guys are going to predict yourselves to lose. And finally, if you leave it at market execution, you don't have to enter an entry price because you're entering at the current market already. So please do me a favor, copy and paste the stop loss 83.57, copy and paste your take profit number 1, which is 82.10, and just understand that from our entry point from 82.71 right now all the way down to the take profit, you are catching 61 pips, right? 61 pips. So if you're doing a 0.10, that'd be $61. So go out there and make that happen, okay? What I would tell you is, please, before you enter that trade, again, write down your entry points, your stop loss, your take profit, and please calculate your pips so you know exactly how much money you're making and you're losing, so you don't put emotions into the money that's invested into the market. Okay, so let's look to the left-hand side again, JAFX. So we did Euro AUD, we did Euro USD, we did Audi JPY, we did CAD JPY. Let's look at USD CHF. Okay, great. So this would have been at point D exactly, would have been a market execution. But guys, this trade already ran its course. Nothing we can really do. Don't be the type of person that says, oh, I know it's going to go down. If they don't give it to you, don't do it. You know, I've made that mistake before. So that's a big tip I can give you. Don't do that, okay? Let's say AUD USD. I think this was also, again, market execution. This was also a winning trade. You know, don't go ahead and do that. The next tip I can give you is, if you don't see any new trades over here on JAFX, guys, click on Pepperstone. On Pepperstone, they might have different currencies. Like if they have Euro AUD here and they have Euro AUD and JFX, guys, use it like it's the exact same thing. Look for different currencies. Like let's say NZD CAD. Okay. So they called it out a little bit low, the entry price. I can see it's about to stop loss, but guys, this is called a wick. The wick, as in WIC, basically means that that's how far below the price has gone. I see that there's some strong rejection over here, but you know what? We would enter this trade at a market execution. Since I'm not 100% confident, I'm not really sure if it's going to go up because it looks like it has, you know, some downwards momentum. I would still go on my MT4. I would find the currency on the upper, you know, on the upper center corner, and I would basically pick NZD CAD. So guys, let's do NZD CAD. You go to your MT4. Let me actually find it. I'm actually doing this with you if you guys don't know. So NZD CAD. Okay, and this, let me see, current price is at 93.13. And then entry price they give me is 93.23. So that's like about 10 pips. You are in range. Leave it at market execution. Right, pick a smaller lot size. Stop loss is 92.95. 92.95. And guys, your take profit one is 93.36. And this would be what's called a buy by market because we want it to go obviously up. So NZD CAD, buy by market, copy and paste the stop loss, copy and paste the take profit, and you are in. Let me see, NZD JAPY. Okay, so they called it again. So this would be again a market execution if you would have entered it right over here. Hit take profit once. So if you did that already, you would have made money. I would not really say enter it again. It would be a risk. It would be a risk that's not on the scanner anymore. It would be a risk on you if you took that trade. You know, today's only one day, and so far we've entered 2 trades, right? I believe it was AUD JPY, or actually I think that one was already done, but we did CAD JPY for sure, and we did NZD CAD. You know, sometimes in trading, it's not about you like how many trades you take. It's more about the quality of the trade you take. So that is for that one. I don't think there's any other one that we actually have. Okay, that one's about to hit TP1. So this would be an old trade already. It's about to take profit number 1. So I would not do that one. And let me actually check for GBP CAD. GBP CAD. All of these have been winners so far. It's been crazy. Okay, point D. So imagine, hypothetically, so I can kind of teach you guys, because this trade did phenomenal, hit all 3 take profits, to kind of teach you for the last session, okay, for the last example. If they give it to you at point D, you would have entered the first trade at a sell limit, right, because you wanted to rebound off of the price, but it didn't touch it. So that means that you not only, did not make money, but you didn't lose money either, so that is okay. Right over here, the bottom entry over here in the second candlestick would have been a sell stop, again, like we did on the previous example. It would have been a sell stop because you wanted to break through to the downside. Copy and paste take profit number 1. Copy and paste the sell stop entry price, which is 1.8347. Copy and paste the stop loss, 1.8416. And you guys are basically good to go. Again, you guys can go back and forth between these two. Please follow the rules. Please make sure you know exactly how to enter the market. And if you have any questions, just ask. Ask your upline leader, ask your upline trader, and they will be more than happy to answer anything for you. The one thing I can recommend and the biggest tip is do not close any trades out prematurely, especially if it's in a loss. If you're in profit and you're comfortable with 10 bucks, 15 bucks, 20 bucks, you don't take it. You're in profit. But guys, I've seen sometimes trades go up here where my cruiser is. And people are like, oh, I'm going to take it out because I'm losing. Don't do that. Leave the trade. Let the trade run its course, because sometimes, again, it might go up, about to hit the stop loss, comes back down, hits all 3 take profits, and the people that did not get emotional, they make money. And the people that basically got emotional and take out the trade early, they lose money. So please, amateurs close out trades prematurely. Professionals let trades run their course. But if you feel like you have to take out the trade, if it's in profit, go ahead. It's better to take out in profit, but never do it for a loss. Guys, thank you so much for tuning into our basic harmonic scanner training. If you guys need anything else, please reach out and we are good to go. Guys, have a great day. We'll stay in touch.